Good morning from the NASDAQ market site here in Times Square. Today is Thursday, November 14th, and I'm John Marino with your Global Markets Report. The big question today is whether markets can continue their move higher, and investors are eager to see retailers' big numbers coming out. Markets are mixed in the U.S. and overseas. They appear to be on a rebound after a rough Wednesday, with both Asian and European stocks back in the black. We're about midway through the European trading session, and the deal's Laura Board is in our London newsroom with more. Laura?
Hi, John. Well, it's felt a bit like a global Janet Yellen Appreciation Society today, although European indices are off their earlier highs. The markets are liking the comments she made about the US economy and her strong suggestion the Fed isn't likely to pare back monetary stimuli anytime soon when she takes the helm. In Japan, the Nikkei was up 2.12%, actually at its highest in almost a month, probably helped by data that showed Japanese growth had slowed almost by half in the third quarter, increasing the likelihood that there'll be further tax and monetary measures to spur growth and push up prices over there. The Hang Seng in Hong Kong was up 0.8%, and in Europe, the DAX is up sharply. The FTSE and CAC 40 in Paris also up sharply. Data here shows that the French and Italian economies actually contracted and German growth slowed in the third quarter. One company worthy of a mention is RWE in Germany, the big utility and power generator, bucking the overall positive trend. It said net profit next year will probably halve to as low as 1.8 billion, and it's announced plans to cut 6,750 jobs by 2016. Its problem in the main is lower electricity wholesale prices. It can't get as much for the electricity it generates, partly because of renewable feed-ins into the overall infrastructure. It was blindsided by the government's sudden decision in 2011 to end nuclear power generation after the Fukushima disaster in Tokyo, and it's struggling to restructure, cut costs, and shift its focus to renewables in the interim. Back to you, John.
Thank you very much. That was Laura Board in the deal's London newsroom. Back here in the U.S., let's check over our wall here. We've got a ton of big retailer numbers coming out shortly. The first one being Wal-Mart. Wal-Mart is expected to report $1.13 a share. That's up a nickel from what the company earned in the same period last year. We just learned that they reported $1.14 a share with a beat but a slight revenue miss. Taking a look now at Kohls. Shares are up more than 35% so far since the beginning of the year, and Wall Street expectations were for Kohls to earn 86 cents a share. That would be a nickel lower than what the company reported this time last year. Jefferies has a buy rating and a target of $67 a share on the retailer, but that might be a miss this morning because they reported only 81 cents a share. Moving along now, checking out earnings here from Nordstrom. The company's stock is up more than 18% year to date, and expectations for Nordstrom were to earn 66 cents a share, which is 5 cents less than what the company reported this time last year. Finally, our action alert today is Red Hat. Jim Cramer is bullish on the stock right now. He said the presentation at Wells Fargo's TMT conference points to an uptick in second half billings growth, and that could be welcome news from investors because the stock is off 12% so far this year. That's our Global Markets Report for today. Be sure to track earnings and breaking news all day at our site. For The Street, I'm John Marino. Have a great day.